Avinash Gorakshakar also joining in. He's founder and head research at Avinash Mentor Research. Avinash, what is your AI play? I think as individuals, we all need AI plays. We just keep asking IT companies, कि आप क्या कर रहे हो AI में? What are we all doing? So I'm asking this to everyone this morning. What is your AI play?
No, I think yesterday, Tamanna, we saw a good traction in the IT companies. I think, we continue to be positive on the large IT companies like Infosys, TCS. And I think talking about AI, as, Kushal mentioned, for the fundamental research also now, AI is supposed to be a facilitator. Instead of reading reams of pages, I think the AI now makes life a little more easy. So I think your speed to market is going to improve. Your analysis finally is your own judgment. But typically, I think most of the analysts now depend on AI tools, especially for simple kind of things like reading a 400-page prospectus document, or maybe reading the notes to account. So this gives them a little bit of edge to be ahead of competition, and most importantly to be on their toes. I think finally you can't replace the human mind and the creativity and the judgment call. So I think AI will be there.
Avinash, you entirely dodged my question, which was what is Avinash's AI play?
Frankly, Tamanna, I would believe that AI is only a facilitator, so we keep using most of the AI tools. I think, as Kush mentioned, but typically betting on a stock, I think the IT companies are best positioned, because that is going to put their productivity, at least improve them by 30-40%. Which I think now the markets have realized that it's better to be friends with AI tools rather than being enemies. So I think Infosys and TCS, I think could spring a surprise, clearly, because I think they are well positioned to actually give better services to their clients. As a personal tool, we keep using a lot of AI tools like Gemini or Perplexity. I think clearly to ensure that we get the best information at the shortest possible kind of timelines.
That we were talking about. Of course, you have now Mohit Malhotra become global CEO, which also talks about what they want to do internationally in terms of their expansion. But do you think it's time to look at that stock more closely?
Yeah, I think overall the FMCG space looks interesting. I think my sense is that this quarter was a tepid quarter for most of the FMCG companies. But I think the good part is that volume growth is now started kicking in. We got very positive commentary from players like Hindustan Lever, typically, something like a Marico. So I think, clearly the fourth quarter is expected, Tamanna, to be pretty decent. I think you get a good ramp up in the first quarter of every calendar year. My sense is that overall next year should be good. I think hopefully, the rural demand is now growing very rapidly. So yes, I think Dabur at the current levels can be accumulated, but with a slightly medium-term horizon. I think to double-digit volume growth. And if that happens, I think then definitely, these stocks could see some, re-rating.
So that's with Dabur. Another stock that will be in focus is Bharti Airtel, as Sharad also mentioned, and this is on the back of the NBFC license that Bharti Airtel subsidiary, which is Airtel Money, has got. I mean, I find it pretty interesting over here in terms of the kind of business that could be carried out in terms of operations as a financial entity. Avinash, any view when it comes to Airtel Money being granted an NBFC license?
No, it will definitely, Hiral, help them, and I think this was long awaited, by the company. I think now with this getting finally the RBI approval, definitely Bharti Money, Airtel Money is definitely going to see a lot of traction in their business. I think what kind of revenue and what kind of traction in the business happens will have to be seen. But I think this definitely is a positive sign. I think some positive trajectory in the stock could be seen in today's morning session.
On Paytm.
No, I think, Sharad, the markets are definitely expecting that the kind of improvement we saw in quarter three will continue going forward. And I think, as you rightly mentioned, with PhonePe now filing its prospectus, I think markets are going to obviously compare, Paytm with PhonePe. Typically, the bad period for Paytm seems to be over. And I think with a series of cost-cutting measures, traction in their main business, I think definitely one could expect a further, kind of upside. Most importantly, I think the negatives which were there earlier are now slowly getting converted into positives, and I think the headroom for growth is quite strong. I mean, unless something dramatically on the compliance side happens again, I would not be surprised that now Paytm would consolidate and maybe gradually move up, based on the kind of numbers they throw up for the next financial year.
A quick, follow up in terms of Paytm, Avinash, I want to take with you is you're saying there is good traction that could be coming in, but taking the valuations of PhonePe into consideration, you're talking about what, a $15 billion that everyone is looking at. Does Paytm then become a re-rating candidate at the current juncture? And if so, are valuations pretty cheap enough for a Paytm for an investor to look at the current price?
No, I think if the timeline is slightly medium term over say next to 12 to 18 months, I think Paytm definitely looks more interesting. I think PhonePe, correct me if I'm wrong. I think PhonePe is not yet profitable, and I think considering the fact that they would be making their debut for the first time, Paytm is considerably a well-established player on the markets. The management, the business, I think everything is very well structured and understood by the market. So yes, this could be a kind of a better choice as compared to PhonePe. I think whether re-rating happens or not, I think depends on the numbers, Hiral. I think we are looking forward for a better quarter four and hopefully a better financial year for next financial year, that is FY27.
Okay, another stock I want to talk about is Ola. Now, Ola has been facing its fair share of concern, and some reprieve which came in was that the Bombay High Court has stayed a warrant issued by the Goa District Consumer Commission saying they've exceeded jurisdiction. They've clarified on the Goa Commission issuing a warrant against the CEO Bhavesh Agarwal. Now, I don't know if you would see this as a kind of a reprieve, Avinash, and some bounce back today, maybe an exit opportunity for those who might be stuck?
No, I think, Tamanna, if at all, the stock bounces back, you're going to see a significant amount of selling, from investors who got stuck up at higher levels. And I think, the markets are overly concerned that the narrative has always been strong from Bhavesh Agarwal, but I think numbers have not matched up to what the narratives are saying. So I think, people have now waited for a very long time. I would not be surprised that if the fourth quarter is also equally disappointing, the stock could actually see a downward, kind of direction rather than going up. So I think any move upwards, you'll see a lot of selling coming in because several small, medium investors have actually bought it at 35 levels, 40 levels, and I think the numbers have been terribly bad. So net, I think we would not like to, suggest any fresh buying. Any rise should be used as an exit opportunity.
Defense as well, because you have this agreement extended between India and France for another decade, which is the Hammer deal. So it's a joint venture that Safran will have with BEL, will produce precision guided munitions in India. HAL is also part of what India and France have decided to do. So that's also going to be coming in the middle of all of this. And I know we're talking about AI and right now robotic dogs and dancing robots and all of that is exciting. But hardcore defense play also is something that we should not miss out on, isn't it, Avinash? Are you seeing opportunities there?
Yeah, exactly. I think BEL will be in focus today. I think considering that the Safran deal is going to be a very large opportunity for them. My sense is that, the markets would start penciling in some sort of, revenue and earnings estimate over the next, say, 12 to 15 months. But definitely, I think HAL or for that reason, BEL, Bharat Dynamics, these are companies which I feel possibly could be, significantly, benefited. Exact details of these orders are not known, but I think once we get a little bit of clarity post the Q4 numbers, I think you will probably see a good traction. And I think, most of these companies are sitting on at least, 1.5 to 2 years kind of revenue visibility. So to that extent, the fourth quarter should also be a reasonably good quarter. My sense is that, somebody who wants to build a defense portfolio should obviously start putting money in a SIP format because orders keep coming in and it's very difficult to, look at what kind of price one would like to enter. But any dip in the market for these companies is a good entry point.
Okay. Ash, have you been looking at NetWeb as a play and as a company? Have you been tracking that company closely? Any view on a NetWeb Technologies and a Hexaware?
Yeah, I think NetWeb Technologies looks interesting, Tamanna. I think clearly they have been operating in the higher technology space. And I think, this new announcement which has come in, I think we could expect some business traction, from the next financial year. My sense is that we still have to understand what is the kind of revenue and the business potential here. But definitely, I think they have done a lot of homework, and I think the right positioning can actually help them, obviously ramp up their business from this segment. In fact, many companies like TCS, Infosys have already gone on record saying that AI now accounts for at least 10 to 12 or 15% of their revenues. So clearly, this is a player which has always been in the limelight for its technology kind of offerings. So yes, I think we'll have to see post the Q4 numbers what kind of outlook the management shares on this product vertical.
I have a very serious question here. And Avinash, I'm going to come to you first on this. How do you differentiate between AI as a sprinkle on top and AI as core? And should companies be rewarded just for adopting AI?
No, I think Tamanna, definitely AI presence is slowly increasing. I think we don't have any pure AI plays in the markets. And I think most of these AI initiatives are now going to get further momentum. And I think revenue and profitability and the business opportunity for AI related announcements is expected to be reflected possibly in FY27. I don't think in FY26 you're going to see a significant impact on earnings purely from AI. But yes, I think companies which are now going to have tie-ups, JVs, or maybe announce new product announcements on AI are definitely going to see some sort of traction in FY27. So the larger companies, we are more positive. Something like a TCS, Infosys, Persistent. These companies could possibly be first in the race. The smaller companies could take some time. So I think clearly, investors should be clear that the core business, that is the services model, will continue to be dominant. But yes, as time progresses, I think FY27 partly and FY28 reasonably bigger, kind of revenue streams could be seen from AI. So that should be the strategy. I think AI is not going to change dramatically in the next 3-4 months. It would take some time before we see the hardcore numbers coming out from the AI kind of business verticals.